When equities rise, and we have seen record highs in some markets around the world, including the S&P 500 on Wall Street, precious metals suffer. But flying in the face of the recent gains in equities, the price of gold is at the very least holding recent rises, and it's recently traded at 13-month highs. So what does the recent price action tell us in the gold market, and where is the gold chart going? Well, Phil Carr is head of trading at the Gold and Silver Club, an international commodities trading research and advisory group. He joins us now. Phil, welcome.
Yeah, hi there, Jeremy. Thank you.
Talk to us first of all about the broad message that we've got here, because as I said, it's an unusual set of circumstances. We've got price action in the gold market, not matching the record highs for equities, but holding on.
Yeah, absolutely. Well, if we look at gold's performance this year, it's up 25% year to date. So we've had incredible inflows. A lot of that has been driven by the investment side of it. So far this year, we've also seen a lot of demand from the West and also the Middle East as well. What is interesting as we come into August here is we are continuing to see gold hold on to its gains. We saw a pullback from non-farm payrolls last week, stronger data than expected. Gold, it pulled back down to $1,330 US. It's retraced pretty much all of the losses from last week already. So that tells us strong investment. A lot of demand at the moment. Every time we're seeing pullbacks to that buy zone between 1300 to about 1340s, traders are using that as an opportunity to buy the pullback. I would also have a look at, of course, recent major economic events. So the Bank of England, they reduced the interest rate just over a week ago. We saw a move from 0.5% down to 0.25%. We were trading gold live at that point, and we saw immediately a breakout to the upside. You've also, that creates a situation in America where it makes it more challenging for them to now go ahead and increase interest rates. So at the beginning of the year, it was on the table for them to go ahead with 4 interest rate increases this year. And that put a lot of pressure on gold last year. In December, we saw gold break down to 5-year lows. And we've seen so far this year, none of those interest rates have gone ahead. The Federal Reserve is in a difficult position now to go ahead with an interest rate hike. In September, certainly, it looks very unlikely. December, there's a possibility, but we'll see. And that has really got a lot of gold bugs excited, buyers excited. We're seeing tremendous investment, demand at the moment.
Well, let's bring up one of your charts, which you've recently published. If we can bring up this chart, which comes up here behind us, with some more detail. Explain what's going on here. This is from the Gold and Silver Club. Explain the different colours on this chart.
Right, okay, so you've got the 5-year historical chart, the 15-year and the 30-year as well. So these are the seasonality patterns that we've had over the last 30 years. And these track the gold market very closely. So if you look at the beginning of this year, we have what is known as the January effect. So this year, from the 4th of January through to mid-February, we saw gold rally 1,800 points, $180 US move on gold. That's a very typical seasonal play that you get with gold. So we saw that play out perfectly. Now, if you have a look at that chart, what is really interesting is that over the month of July, we did get a pullback on gold following on from non-farm payrolls at the beginning of the month. Not a major pullback. We pulled back about 500 points on gold. So from the highs of Brexit from 1,375 down to 1,300 and about $30 US per ounce, around that zone. But since then, we've started to see over the last week gold start to pick up in terms of demand. As we go into the August season, that is where you see the Asia the wedding season start, where demand picks up in India in particular. You can often see them start to buy gold, particularly for jewelry. Investment demand increases. You've also got a number of festivals in Asia, and that often is a big contributor to gold going up in August and September. And so far, most of the rally this year has been from the West. We haven't seen India or China, who are major buyers of gold, participate much in this rally. So that tells us there's a lot of upside here for gold. What I would also suggest is very interesting. Silver is now up 45% this year, best performing commodity of 2016. Silver has entered into a bull market this year, and if you have a look at the last bull market on silver, which went from 2008 to 2011, 2.5 years, during that period, silver increased by 480%. And the inflows that we're seeing this year are matching the 2009 inflows during the financial crisis. So we are at a level of investment inflows, which is matching over 8 years ago, and if we were on track to produce the same sort of returns, you've got incredible upside for silver and gold. And I truly believe right now a lot of investors and traders have been gifted with an opportunity at the moment to get in at the current levels before the next leg higher. The last time that we did an interview, which was approximately 2 months ago, we were talking about gold had just broken through 1,300. Can it go higher? Up 16% this year. 2 months later, gold got up to 1,375 US dollars an ounce. On Brexit, I believe in a couple of months' time, we'll be talking about gold hit 1,400. Yeah. That's my view.
Okay, let's go back to that and analyse the chart in some more detail, because you've got a couple of trend lines here which are beginning to come together. So let's look at that in some more detail. Bring up the chart full screen. Talk to us about this. You've already spoken about some of the levels.
Yes.
What have you drawn on here?
Okay, so you've got an underlying supportive trend channel, which if you go back to the beginning of June, the first pop that we saw to the upside, that was after the worst non-farm payrolls that we've seen in 6 years. So we saw significant inflows in gold. If you go back to the next retest, which came back, that's it. That was the low of 1250 that we formed prior to Brexit, where we saw incredible inflows. And then if you go back to the recent pullback as well, that was just down to the FOMC statement where the interest rate in America was unchanged. So really at the moment, we've got the potential for gold. There's nothing really to stop this market right now. We don't have another FOMC announcement until mid-September. And I would suggest over the month of August, we've got the minutes from the FOMC next week on Wednesday, but overall, fundamentally, investment demand and technically, I do see more upside. I see a very limited downside. And I think if gold was to retrace down to your supportive levels there, 1,308 to 1,330, that would also offer a good opportunity to enter into gold at a better price at the moment.
Yeah, you've got a couple of resistance points here, 1392 and 1433. One would suggest that these are, in fact, I think these go back quite some time, don't they? We're talking all the way back, to 27th of September, August 2013. So we're talking almost three-year highs. That would be when it gets to that level. Do you see much activity and opportunities to get in at these levels? What I'm talking about, sorry, is do you see much downside to get in at a better level, or would you get in at these levels and ride the market higher, or are you looking at better lower points to get in?
We've got positions at these levels at the moment. We have left some capital available for if gold was to come down a little bit lower, we would add to those positions. I think right now is a good opportunity. If you get in too high with gold, when it starts to get into an overbought condition, you're liable to get shaken out. Often what you will find on the metals is you get these bull traps when they break above their yearly highs. So I suspect if we get a break above 1375, we could have good follow through that day up towards the 1400s. But as we've seen with platinum and palladium, over the last 24 hours, we've seen significant spikes, particularly on palladium. Moved 7% yesterday, up to 14-month highs. Today it's pulled back right back again. So you see these big spikes where a lot of larger positions get triggered in at those levels, but then you need to be mindful to get out before it gets too overbought. Gold is like that. It tends to reward you if you could get in at the better prices. Don't get tricked and get in at the highs. Yeah.
Okay. All right, Phil, we've got to leave it there, but thanks indeed for joining us. It's been a pleasure. Phil Carr there from the Gold and Silver Club.